Hey everyone, and welcome to Earnings Cheat Sheet for Friday, July 12th. It's the usual suspects, Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So Ed, what do you have on tap for us today?
Well, I want to take a look at Taiwan Semiconductor, ASML, and Netflix.
Well, interesting you mentioned the chip stocks because a lot of action there today on Thursday, July 11th. But let's go ahead and start with Taiwan Semi. The chip maker is scheduled to report its Q2 earnings on Thursday, July 18th. And let's take a look at that cheat sheet because earnings are expected to rise 3% to 134 per share. And we already know revenue because they released sales numbers on July 10th. Those figures climbed 33% to 6.42 billion, beating analyst expectations. And here's why we're watching Taiwan Semiconductor. We'll want to see if they raise guidance and discuss any capital spending plans. So Ed, this is a big one on our radar because it's the world's largest third-party chip maker, supplies chips for NVIDIA and Apple. And this could be an early indicator again of how that AI demand is looking and how this earnings season might shape up.
Yeah, it really is an important indicator. First one, we really get on the tech side. Taiwan Semi, it was tried to join the $1 trillion valuation club. It's twice this week has done it, intermittently. Very powerful. It's like, and so what it has to say about the outlook, if it raises the outlook, that's what, that's a positive expectation signs because AI has been driving that. So that'd be a positive signal for NVIDIA, for Broadcom and others that it makes chips for, and just the whole sign of demand and the capital spending. I mean, this is, as I said, is an enormous chip maker. I mean, so it buys, extremely expensive equipment from ASML, which we'll talk about, as well as Applied Materials and others. So, if they raise capital spending guidance, that's really important for those companies. So, yeah, definitely one of the most important names in the chip sector above and beyond the fact that it's a big, strong stock.
Right. And I want to talk a little bit about this one because we covered it last quarter and they clocked in an earnings beat in Q1. And the main takeaway there was you really did see that AI demand for those chips. And it also seemed like they were able to navigate through some macroeconomic headwinds. We've had supply issues with chip stocks over the last year or so, and navigating through that earthquake that was there. And we also saw an approval for a foundry here in the US. So it seems like maybe some of these headwinds are behind Taiwan Semi a little bit.
Yeah, there's definitely been a turnaround too, just on that fundamental side, because the we're seeing earnings and sales pick up. I mean, for a while it was grinding down. And that happens with the chip sector, is that people can see that the orders are coming in and there's going to be growth, but it's still nice to see that growth come in to confirm what has been going on. Because obviously this has been an uptrend for quite a while in the last several months, and really since the end of 2022. So really, really strong move here.
All right, well, I want to bring up a chart really quick and actually going to just start looking at the semiconductor industry group. It's on pace for a fifth straight week of gains, Ed, and looking really strong. We saw software kind of outperform in June, but it really seems like the money is starting to rotate into chips right now.
Today wasn't necessarily a specific day for chips, but the trend has been obvious. This week, and really, honestly, it didn't do badly. Yeah, software rebounded. This is where all it is. It's like the picks and shovels, only of the AI revolution. We're still unclear. You're going to buy it again, like all these companies investing, hopefully to try to get revenue or other things. But the people making money right now are the companies that are providing those chips or the other kind of hardware that are really turning around. And Taiwan Semi is very much at the forefront. There's really not any alternative. If you want to make these advanced chips, you're using Taiwan Semi. Is pretty much where you go. So it is just so crucial to see this going well, and it has. It's just been a tremendous move, and you can see the earnings have been weak, and then finally turned up in this last quarter. You can see along that chart, and then it should be, it may be a little weaker. Then it's going to really pick up more later in the year. The revenue is already sort of turned around for sure, and just want to see that continuing on with these super high priced and high margin chips that they're making now.
Right, and I'm going to switch over to the daily just so we can see this a little bit better, but broke out of this double bottom base here and, is in that profit zone. So Ed, as we're approaching earnings, if you took a position in this stock from this buy point here of 148.43, how are you going to possibly be managing your position ahead of earnings?
Assuming it's not a massive position. I mean, I'll be honest, this is something that normally if I have a 10% cushion, I will let it ride. I know it got into the profit taking zone, but honestly, the time to take the profit was probably when it first went into the profit taking zone, because what can happen sort of when it gets there is that sometimes it'll blow on by and just keeps on going. Sometimes it'll tumble back toward the buy point or even worse. And sometimes it just pauses for a while. And that sort of seems like what it did. It paused for a little while and now it's sort of trying to move out. Now, we'll see what the earnings are like and the guidance and all that. So it may not work, but that in this situation, it feels like it's already had that moment. Obviously, if it sells off really sharply through the 21-day line, you might be thinking, wow, I want to lock in some profits now. This seems like if you think that AI's got legs, this seems like one that's going to do well and be among the strong performers.
And if you're someone that's looking to maybe initiate a position in this, how would you want this chart to set up then post earnings?
I think maybe you'd want to see almost like a gradual pullback toward the 50-day line, 10-week line, either going sideways or real gradual, and let that 50-day line catch up, because it seems a little steep. I suppose you could buy it off the 21-day line, but after earnings. But there's a lot of other earnings coming out, so it's a little bit more. It's not as safe. It's a little bit different between a base and a ledge. I mean, you can sort of, it's a little bit more risk when in that situation. So I would prefer a new base or a pullback to the 50-day, 10-week line. May not provide that. I mean, that's just the way it is right now.
And you talked about looking at those leaders, and I just want to toggle over here. This is something I've seen you and Justin Nielsen been doing, changing kind of this relative strength line to look compared to the overall industry group. So just going to change that over, and you can see this compared to the chip industry group, this RS line, even though it's moved lower the last few days or so, hitting those new highs. So what are your thoughts here looking at Taiwan Semi compared to the performance of that chip industry group?
Yeah, I mean, when you consider the chip group is among the strongest groups, and the fact that it still has this RS line essentially at highs, it's not just being the S&P 500, it's beating chip makers. Now, this particular group doesn't have NVIDIA, which is a fabulous chip maker, because NVIDIA uses somebody else, uses Taiwan's fabs to actually make the chips. But nonetheless, there's a lot of strong chips in this group. And so this is, look, Taiwan Semi is just one of the stronger performing names. It's been a big cap AI rally, and this is a big cap AI chip maker. And that's, among other things. It does make a lot of basic chips, but the real growth has been in these advanced and these AI chips.
All right, well, let's hop on over to another semi stock, and that's ASML. That chip maker is scheduled to report Q2 earnings on Wednesday, July 17th. Those earnings are expected to drop 28% to $3.99 per share, and revenue is expected to fall 16% to $6.5 billion. And here's why we're watching ASML. We're going to be wanting to see if there's any hints about orders from their big customers. I think Taiwan Semi is part of that. And we'll also be paying attention to any China commentary and how chip restrictions are impacting business. This one is also in a buy zone after a recent breakout. So again, Ed, we've seen chip stocks come back here. ASML stock was in record high territory in intraday trading on July 11th. And it also got some positive news from analysts saying that, this really did deserve a premium valuation this week. And it looks like earnings losses are also narrowing. So what are your thoughts with ASML as those earnings approach?
Yeah, I mean, again, this is sort of like it's got that turnaround nature to it. It still hasn't quite turned around. People are expecting it later in the year. It's, that kind of cyclicality with chip makers is even more so with chip equipment. That has really the boom bang. This makes these ultra extreme ultraviolet lithography machines that are extremely expensive. And so they get a good order in there, and it really starts picking up in there. Then it's, again, they're sort of like the only ones that make them, and so they can charge a premium. And you want to make these cutting edge chips, you really need ASML's devices. This is the first one. So like Taiwan Semi and ASML are going to come out, and these are a couple of big names that are going to really set the tone for the chip sector. Definitely want to see some signs if they're going to see that turnaround. Is their guidance going to be strong? They've had some issues because China's a big export market, or has been, and a lot of that, some of their best models they can't sell anymore, or that's being restricted. So that will be an issue for them. How much is that affecting it? Or if they said, like, okay, that's sort of been priced, that they're sort of dealt with that at this point. So definitely want to see that. But it's, this is like, you may have stocks that are not Taiwan Semi or ASML, but boy, if you have them in that chip or chip equipment making, you really want to be paying attention in the sort of back-to-back kind of earnings between these two names.
Right. And let's go ahead and look at the chart then. I'm on the daily ed. And again, we had this breakout on June 12th from pretty long consolidation. Seemed to kind of not do much after that. Flirted with that 21-day line, and then still actionable technically in that buy zone. And again, you can see the action from today, Thursday, July 11th, hits that high intraday, but then falls sharply from that. So what are your thoughts here with ASML's chart?
Yeah, probably the best time to buy it was when it gapped up on the 50-day line right on, like, in that gap up. I think there might have been news about, or reports of, some strong demand, and so we saw a lot of names in there. So that was probably the best time, sort of an early entry, sort of a handle there. And then it paused. A lot of stocks were going up. They would run up to their highs, pretty quickly. It was getting sort of extended from the 50-day line. So it's sort of nice that it sort of went sideways. Now it's not as extended. So it's in holding, it sort of, a lot of stocks did this. It came up, this time period, it came up, sort of pulled back. The market was sort of doing this as well. The sort of NASDAQ sort of was up at highs, went sideways for a couple of weeks, and then moved out again. So it seemed to be fairly constructive. You see the RS line, even when it went down, even when the stock went down, really didn't fall that much. And so it isn't at highs, but it's not far from highs. So very constructive. If it weren't for earnings, it would definitely be buyable. At this point, it's getting awfully close to that point, and probably want to be waiting for that, or you're using an option to play the earnings report rather than taking on a new position right now.
All right. So definitely one for the watch list there. And let's move on to the next name on our list, which is Netflix. That company reports earnings on Thursday, July 17th. And the streaming giant is expected to see Q2 earnings rise 44% to $4.74 per share. And analysts expect revenue to climb 8% to $9.5 billion. They also see subscribers growing to 9.3 million. And here's why we're watching Netflix. Again, we're going to be keen on those subscriber numbers and outlook. It's going to be a key metric for this report. We're also going to want to hear how initiatives related to ad tier plans and password sharing crackdowns are impacting subscriber growth. And again, this stock is also one in a buy zone after breaking out. So Ed, when it comes to streaming, it seems like Netflix is really the leader in this area. So what are you going to be looking at here as those earnings approach?
Yeah, I mean, it always seems like subscriber numbers are the real numbers that people care about, and with good reason. That's just sort of like that's the ultimate run through there. They found out, well, it does feel like all the other streaming services are crying uncle. They're sort of giving up. They're cutting back. They're selling more content to Netflix, which is, not only do they get content on the cheap, and it puts them on the other side. I was going to get Max, and then a few of the Max shows went on to Netflix, and I said, all right, I guess I'll just not. And it just also means that they don't have to produce as many shows. Netflix was spending a ton of money on new shows, and they still do, but relative to their revenue and the subscriber base, their content costs are definitely cooling off a bit. So that's why there's been this sort of transition. There was a nice acceleration in earnings last year. There's supposed to be a nice acceleration, nice earnings growth this year, and solid next year. So there's that tailwind: stronger subscriber growth, weakened competition, lower content costs. I mean, it's pretty easy how it's a pretty happy ending for Netflix right now.
Well, we hope so. And again, this is one we covered from last quarter. And in Q1, they saw subscriber growth of 16% over the previous year. And as you mentioned, seems like they've really been focused on growing profits over that subscriber number. So it'll be interesting to see if that focus shifts. And some more good news for them this week. They got a price target hike from TD Cowen. So that kind of boosted shares a little bit earlier in the week. But let's go ahead and take a look at the chart, Ed, because again, on May 20th, this broke out of a cut base, 639 buy point. And as we kind of seen, just kind of moved sideways a little bit. But today, breaking below this 21-day line. So does that kind of give you some cause for concern? Or if you're in a position in this, what are your thoughts?
I mean, if you bought it on that breakout, you don't have much of a cushion. I mean, it's not acting terribly, okay? I mean, because the stock market, some of the big caps had it. It's understandable happen. It might do fine, but you have a decision to make when earnings come. You don't have to do it right, like it's like at the moment I'm talking, but by the time this earnings report, it's not too far away, and so you may want to decide. It's like, look, this is not one that's nothing. This one can have an enormous moves. Look at the last quarter. There was a big drop on earnings. Now it found a few months ago, and that really big drop, and it was a big increase in the prior one. This one moves a lot on earnings, so you just have to know that going in. This is not one that's going to go up, or that is likely to go up 2 or 3%. This is likely to go up 8 or 9%. It might go up 20%. It might go down 20%. Going in without a cushion, that just adds risk, and you have to know that. If that's how you normally play it, that's something you can do, but it definitely has to be your rules, and you have to be thinking about portfolio management, what works for you.
All right. Well, we looked at some of the big ones, but we're going to do a lightning round, a very robust lightning round, I would say. There's a lot of financial names still reporting, and we had JP Morgan and Wells Fargo will report on Friday, so that will set the tone. But let's take a look at Goldman Sachs. And again, this is in a buy zone after a July 8th breakout. As we said, these bank stocks and financial stocks have had a pretty nice run, 4 straight weeks of gains. And again, earnings on July 12th are going to be pretty significant on how these might go.
Yeah, and the only reason I didn't go for this one is because there's so many that are already going to impact on July 12th, so that will set the tone quite a bit. So we'll see. But yes, very important. This is one that supposed to have strong profits this in 2024 for the full year. You can see they have pretty good numbers here. It doesn't, this is not as impacted by the interest rates like some of the other banks, but still that seems to have been a positive tailwind for the banks. So want to see this name. This is the Dow Jones Giant. It's actually been really acting well along with a lot of other banks. So definitely investors should be paying attention to Goldman.
All right, well, let's take a look at another one. That's Bank of America. And, looking at the weekly chart, Ed, we kind of see this 3 weeks tight area, but looks maybe extended from a buy right now. So what are your thoughts on Bank of America? Just looking at the fundamentals, looks like they're kind of narrowing that earnings gap. So what are your thoughts here?
Yeah, this one doesn't have as strong a fundamental. It's supposed to turn around. It does feel like a little extended. This was like a 5-6 weeks tight. So you could almost treat it as like you could have used this and it was bouncing off the 10-week line. So if you had taken a new position, it was understandable, even though you knew earnings were coming in. Don't have a big cushion, but it's also getting too far to take a new position for sure, even if it weren't for earnings. But that's just something to watch. But nice to see this turn around. It's more of a traditional lender than a lot of the other big banks. It has investment banking, but not as much as some of the other money center banks. So nice to see the turnaround. There's others with better fundamentals, but acting very well.
All right, well, let's take a look at one more in the financial sector, and that's Morgan Stanley. They also report next week. And again, this one breaking out, I'm going to switch to the daily because I believe it broke out either today or on July 11th out of this cut base here. So another one that's fresh in a buy zone ahead of those earnings, Ed.
Yeah, so maybe if it was closer to the 50-day line, would have been a little safer to try it. There would have been a little bit more time. I mean, it's in the buy zone, but it sort of moved up quite a bit over several days, and earnings coming up. We'll see what happens. It could be that if it pulls back on some of the other bank earnings ahead of that, and then and then you see, and then it comes up off of it, maybe it would look a little bit more interesting. But right now, it sort of feels a little stretched in that regard, especially with earnings coming up.
All right, and let's take just a look at the overall banking industry group, because as we said, had a pretty nice run here over the last few weeks. So do you have any more thoughts on this sector and maybe what it signifies about the overall market?
Yeah, I mean, we've seen a shift. I mean, there's that not only is there an expectation of Fed rate cuts, which would be sort of positive for economic growth, but we're also seeing a narrowing of the yield spread inversion. I mean, in theory, like they would like to see the 10-year higher than the 2-year, but at least what we're getting is the 2-year isn't as high above the 10-year, because that's a weird situation for banks. If you're borrowing short, lending long, and your borrowing costs are higher than your lending costs, I mean, it's like that's obviously that doesn't work very well. So we want to see the net interest margins from all these banks, especially the non-investment banks. Are we seeing the net interest margins and income? Maybe not in Q2, but are we going to see that with the outlook? Are we going to see positive Q3, Q4 because of that improving sort of macroeconomic backdrop?
All right, well, let's go from banks to credit cards then with American Express. They're reporting earnings next week, and this one setting up in a flat base with a 244.41 buy point. Ed, what are your thoughts here with American Express?
Unlike Visa and MasterCard, American Express actually holds the balances. Like if you charge on American Express, they're holding the balance, they're charging you the interest. So they're benefiting from maybe sort of the interest rates coming down and somewhat. I mean, there's sort of a maybe more demand in that way, whereas Visa and MasterCard have been struggling more. This one's setting up nicely, but I'll just have to see how earnings are going. So it's not as performing as well as some of those banks that we saw, but it's definitely one that could be interesting when we have earnings come out. It'd be great if it could just sort of pause for a few days, because you see it sort of had this move off the uptrend, not radical, but it's still been moving up. If it paused here, sort of formed a quasi handle just above the 50-day 10-week line, and then moved out on earnings, that would be ideal. So we'll have to see. It may be in position with when earnings come out, or maybe it won't be.
Right, and I'm on the weekly here just to kind of show, over the last year, pretty solid earnings and sales growth here for American Express. So you expect that picture to change, or what might be an early indicator for you?
Yeah, that'll be interesting to see how that goes. Like, if consumer spending slows, I mean, ultimately, that will impact there. I mean, if it really slowed, then you start worrying about delinquencies and stuff. But that probably, the economy seems to be healthy. That's probably not too big of a concern on those charge-offs and things. But that would be the thing: is if the economy slows and people just stop, spending less, that would be an impact for American Express.
All right, well, let's go to the next one on our list. It's Interactive Brokers. And I'm going to switch back over to the daily just so we can see better. But again, this one setting up in that flat base, 129.19 official buy point. But today closing below that 50-day line, Ed. So tell us about Interactive Brokers. How are you thinking about this as earnings approach?
Doesn't look nearly as nice as it did a week or so ago. Yeah, it sort of almost had a flash and early entry. It bounced off the 50-day line. You could have argued there was a trend line break. So it's like, yeah, buy this. And then it came down the next day. Okay, not too bad. But yeah, since then, so anybody who bought early probably would want to be stepping out. And so you'd really want to see this improve, like get back above some of those levels before being interested in it. It's still just in a flat base. Yeah, the relative strength line is coming down, but it is after a prior uptrend. So it's not terrible, but not great action day. You'd want to see it improve until then. In addition to Interactive Brokers, we also have Schwab, SCHW. That one isn't, okay, that one is bouncing back actually a little bit here as well. So that might come before Interactive Brokers. Interactive Brokers seem to be doing better than Schwab, but now Schwab is the one bouncing above the 50-day line. That almost looks actionable if it weren't for the fact that there's earnings. So wanted to see how that performs as well. They rely a lot on margin, like we'll see about assets. This one is a bigger wealth management thing than Interactive Brokers, but just looking for, kind of that, stock activity, as long as the stock market doing well is good for both these companies, because you're seeing, see a lot of trading, see a lot of options, all that stuff going on.
All right, let's go to the final one on our list. That's United Healthcare. And I'm going to switch to the weekly chart because we've seen this recent tight area here. But this one looking a little more volatile than some of the other ones, Ed. So what are your thoughts here with United Healthcare, and why might it be important for investors to look at?
Yeah, this one is not doing well, and it's probably not going to be one, even if it got above the 200-day line. I mean, there's some people who say, well, that's usually not how we would probably see it. But it is very important because this is going to be the first health insurer, and what they have to say about patient care, like medical expenses. It seems like we have an aging population. It just feels like more we're spending money, and when they spend money, well, I mean, look, like any company, an insurance company, like it's great if they collect premiums and then nobody actually uses the healthcare system. But as more people do that, that's bad for them. But it's also not just an indicator for health insurers, but it'll be an indicator for hospitals, be an indicator for medical device makers. If they say people are going to the hospital and getting lots of procedures, you could see a lot of other companies. There's one name I forgot to give to you, but that's Intuitive Surgical, ISRG, that also reports next week. So that would give you sort of the flip side. I know if they'd love to say procedures are going through the roof, and this one
Much
has
different chart compared to United
much
Health.
different chart. Yeah. So more procedures has been good for news for Intuitive Surgical. So those two reports, and they have different flavors, will give you some indication of just, sort of demand for healthcare resources and when that can be influential for a whole slew of health services and products firms.
All right, Ed. Well, thanks so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. And if you want even more market analysis, be sure to tune in to Stock Market Today with Alyssa Korm. That goes live after the closing bell. Thank you so much for watching. We'll see you next week.